Is Bitcoin about to break the trend of 4-year cycles, or is this bull market finished? So we'll get straight into it here on the BTC growth since cycle lows chart. And as we can see, Bitcoin has just surpassed the elapsed time since cycle lows of the previous Bitcoin cycle. If we just zoom in, we can see the 2021-2022 cycle topped after 1,059 days from the previous bear cycle low. And what we can see, this current Bitcoin cycle has now exceeded that. If we actually look at the average time elapsed from the cycle lows in the two previous cycles, we're now beyond the average of those two previous cycles and will in the next few days surpass that 2017 cycle length too. So is the 4-year cycle traditional model of Bitcoin price action broken, or can we maybe anticipate a change in the dynamics of the current market? Well, a few things we need to acknowledge. Why did this 4-year cycle traditionally occur in Bitcoin? Many will look to the Bitcoin halving event, which makes sense. As soon as we see an event that decreases the inflation rate by 50% of an asset overnight, that's obviously going to have a fairly notable impact on the supply and demand economics of the network. And as we can see, at each of these dashed lines, at each of these halving events, practically instantly, in every single instance, we saw the Bitcoin price absolutely skyrocket. Apart from this cycle, where afterwards we saw about 5 months of chopping consolidation. Yes, we have had a couple big explosive moves to the upside since then, but really it's been pretty boring. We all have to agree it's been a pretty poor cycle so far. So is this because the halving event has lost its influence? If we look at the circulating supply of Bitcoin, we can see this is practically at 95%. A vast majority of all Bitcoin that will ever come in circulation are already in circulation. So this decreasing inflation rate probably isn't having a monumental influence on the Bitcoin price action. Just from a supply and demand perspective, if there's thousands of Bitcoin every single day being mined and minted in new blocks going onto the open market by miners so that they can sustain their operations, that's a lot of Bitcoin that needs to be bought up. But right now it's about 450 BTC a day, which is being gobbled up just instantly, easily by just a small number of market participants. So is it the fact that the halving event is no longer having this influence on cycles, or do we need to look at something else like the global liquidity cycle to try and gain a perspective on where we currently are in this BTC cycle? Has it finished? Are we over? Is it in bear cycle territory? Well, if we go over to TradingView here, what we can see is, I'm just kind of giving away what will be going on to next, but if we look at the BTC USD chart, and this is the global M2 liquidity chart on a year-on-year basis. And all I've done is taking at a fixed interval the 4-year cycle for Bitcoin, but rather than looking at where the halving event occurs, this is when the global M2 money supply on a year-on-year basis bottoms out. And what we can see is at a very fixed interval, this has been coinciding with Bitcoin's bottoms almost exactly throughout its entire history. Now, if I draw another line on outlining the Bitcoin halving events and when they occur, we can see they're occurring at almost a set period of time following this bottoming in the global M2 money supply year-on-year expansion. We can see the slight discrepancy in this would be the 2011 instance, but we can see that the global M2 year-on-year supply actually bottomed out alongside the halving event at that period in time. So we need to really wonder, has the halving event really been the driving force of the Bitcoin 4-year cycle at any point in history? Or especially if we look to 2017 and the 2021 cycle, what we can really see is these big exponential rallies really coincided with just liquidity being injected into the system. Now, to try and better outline the influence of liquidity on markets, we can look to gold. Now, again, this is just looking at the global M2 money supply on a year-on-year basis. And what we can see is the relationship between the gold price appreciation or depreciation and the rate of expansion or contraction in global M2 liquidity is hard to miss. It's pretty much one-to-one for a vast majority of gold's price action. And this is going back decades. This is long before Bitcoin's inception. We can see the influence of expanding liquidity on markets such as gold. We can see the recent rally may have slightly surpassed expectations given the fact that we've not seen a very rapid expansion in global M2 liquidity yet this cycle. But that's another reason that I think Bitcoin may have recently stalled. If we just go back to Bitcoin Magazine Pro here, what we can do is if we find the US dollar strength index chart, which is in a different section, obviously. I'm a professional, I always plan these videos out well in advance. We can see that alongside the Bitcoin price action, having this stall, having this period of choppy consolidation, has also been alongside the US dollar strength index, the DXY actually rallying to the upside. And when we did see the Bitcoin price action really, truly rally hard to the upside, it was alongside the US dollar strength index massively declining. Now, of course, there are some exceptions to this, but this is where, again, rather than just looking at the global M2 money supply, we need to acknowledge the market on a year-on-year basis. What we can do is, wrong chart, if we look at the US dollar strength index, the DXY, on a year-on-year basis, we can see that the inverse correlation between the price action and the US dollar strength index is, again, pretty much one-to-one. Once we see the US dollar losing purchasing power, this has coincided exactly with Bitcoin's price action rapidly increasing on a year-on-year basis. And the same is true for the downside. Once we see the US dollar strength index on a year-on-year basis massively increasing and rallying, this is again coincided with Bitcoin bear cycles. So is this, again, something to do with the Bitcoin halving event? Or if we look into where these US dollar strength index declines really started to occur, we can see, again, they coincided almost exactly with the Bitcoin halving events. What we can see is if we look at the US dollar strength index on a year-on-year basis against gold and then invert the chart, again, we can see a very, very similar correlation between the gold price action and the underlying year-on-year rate of strength increase or decrease in the US dollar strength index. And if we go back over here, what we can actually see is recently some comments by the Fed Chair Jerome Powell indicates that the process of federal balance sheet drawdown may be ending. Now, if we just look at a recent analysis piece I did for site subscribers, we can actually see that historically the potential end of quantitative tightening, not just for Bitcoin, but for all markets, has historically signified the start of massive price appreciation. We can see in the 3 previous instances that this has occurred for Bitcoin, again, historically they've coincided just prior to a Bitcoin halving event like we saw in 2012, like we saw in 2020, then this could be another accelerating factor to potentially extend this Bitcoin cycle, especially if we look to the influence it has on traditional markets. Like I said, the S&P 500 in the 2 years that followed Fed debt expansion crossing above its 4-year average, the S&P rallied over 47% on average, which is over 5 times the average returns over any given 2-year period. So where is Bitcoin in the cycle? Where it depends on where you believe the traditional cycle is. If we look at the correlation between Bitcoin and the S&P 500, they're incredibly highly correlated. And if we just go back to TradingView for one last time, what we can see, even though recently we have seen a little bit of a rally in the US dollar strength index, we're now approaching a turning point, a key level in the US dollar strength index that has historically resulted in price either appreciating like it has on multiple occasions when it bounced from this point, or again on multiple different instances throughout the past decade, resulting in a massive continued decline in the US dollar strength index. So I think this Bitcoin cycle, rather than the traditional 4-year basis, which may have been more heavily influenced by the Bitcoin halving event, rather than just looking at the global M2 money supply and how much it's expanding, if we look at the year-on-year rate of acceleration or deceleration and expansion or contraction in global M2, which is heavily influenced by the underlying year-on-year strength in the US dollar strength index, that gives us a better understanding on where the next few weeks could go for Bitcoin. And as we can see, this is now starting to rapidly decline. And like I showed you on the gold chart, once we actually invert this to see the inverse correlation on Bitcoin's price, then we may still have plenty of room to go in this BTC cycle. So just to summarize, we have now surpassed the previous 2 Bitcoin cycles in terms of elapsed time since the previous cycle low, leaving many to wonder if BTC has topped and if the 4-year cycle is pointing towards an imminent bear market. And of course, we have to acknowledge that this is definitely a possibility. The Bitcoin price could have already topped. We do need to acknowledge that the probability of this being true does not outweigh the likelihood that this bull market still has upside potential remaining. Here we practically just covered macro charts, but if we look at the on-chain indicators, derivatives, technical factors, everything is looking still strong for the Bitcoin price action, even though we have had this recent retracement. And like we could see, the traditional 4-year cycle was almost certainly heavily influenced by the Bitcoin halving event. We also have to acknowledge that it was also, and even maybe more so, influenced by the expansion or contraction in the year-on-year global liquidity cycle, or debasement cycle. I've seen many people pointing towards the fact that we shouldn't be referring to this as a liquidity cycle, but the fact that our fiat currencies are just losing purchasing power, the debasement of our peg to actually measure the valuation of assets is diminishing so rapidly. And if the same is to be true this time around, then there's definitely a good chance that this cycle is not done yet. If you like this video, then please visit Bitcoin Magazine Pro, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto interview reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on where we are in this Bitcoin cycle. Do you think that this 4-year cycle chart is something that we need to be paying attention to, and that potentially we've already seen the Bitcoin price action peak? Or do you think that now we've almost diverged away from the traditional 4-year cycle and are more closely following the business and liquidity and debasement cycle that I'm kind of leaning more towards? I do still think we will have a parabolic move for Bitcoin, just given the fact that we've already had a number of big explosive moves to the upside in this cycle so far. So I'm not necessarily saying that this cycle is going to extend way into 2026. My base case is still a top in late this year, maybe early next year, but every single day that we see more and more consolidation in Bitcoin, and more liquidity being injected into the system, and more debasement by central banks and governments of their fiat currencies, gives me more indication, more likelihood, I think, that this cycle may extend a little bit further than we initially anticipated. But like I always say, it's much better to react than predict. As always, thank you all very much for watching. Leave your comments below and on social media. I look forward to reading and replying to them.